Let's kick off this segment with the DAX index, the German equity market indices. You'll see from the charts here we're sitting on a parabolic buy signal. Again, we had a false breakdown, and again this could be a very quick stop and reverse. Bit of a messy looking chart, to be honest. Number of gaps on the chart. Again, almost you would argue trendless. In terms of momentum, sitting at 54 reading. Again, neither overbought or oversold. Well below the 200-day moving average. You'll see that sitting quite a way above the market. Again, you really want, in round numbers, to sort of close above the 11,400 area to really get quite excited on the bull. Worth reporting, in today's Financial Times in London, it reported that 4 top shareholders in Deutsche Bank want the CEO to make deeper cuts to its loss-making US investment banking arm. Let's move on to the Dow Jones. This is a better looking chart for me. We're on a parabolic buy signal. We're trading above the 200-day moving average, and we've had a number of closes above. Momentum-wise, a little bit stretched, up at 66. Again, markets can remain overbought or oversold for much longer than we can remain solvent. But again, you would look at this regardless of market and say, purely from a technical perspective, this looks good. The Nasdaq, just to add, is still testing the top of the range at 7,000. Let's move on to the SP 500. Technical analysts have sort of highlighted the fact that the short-term range 2,700 to 2,800. Again, some would argue a tad overbought, a reading of 66. And another technician I read this morning said it's making zero progress. But these are the charts that really interest me. You'll see that this 200-day moving average has actually acted quite well as resistance in November and December around this area. Remember, technical analysis is not a precise science. But for choice, you know, a close above this area, decent sort of move up to around the 2,800 area. Again, you'd have a lower low and a higher high. Okay, and again, you know, off these lows, I think almost certainly from a technical perspective, you'd rather be long than short. Let's move on to the VIX index. Recap, it's a market index that represents the market's expectation of 30-day forward-looking volatility. Again, this is super quiet, back on its 200-day moving average. It's implying that everything is peaceful in the world. Again, this always makes me very worried on a fundamental basis that when things go quiet, akin to a Bollinger Band, you really should be on guards. But at the moment, it's sitting there, and again, it's looking as if it doesn't really want to break to the upside at this juncture. Let's talk about another boring chart and wrap this segment up. The NIKKEI 225 index, at best, this is a sideways trading market. The Bollinger Bands, sorry, I beg your pardon, the SARs are very tight. Again, the price action drifting at best. Momentum-wise, a reading of 57. I can't see any reason to be long or short on this index at the moment. Again, 200-day moving average, well above the market. The bulls really need to get above that. And again, for the systematic traders to come in, you'd want a close above that level.